Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Into the second consecutive day, the bears still weigh on the Australian dollar after a softer local inflation data and a hawkish Reserve Bank of New Zealand decision sparked a sell-off in the Aussie-Kiwi cross. With that sending the Aussie lower, easing tensions around a potential US-Iran agreement has also reduced fears of a broader energy-driven inflation shock, giving the Federal Reserve room to maintain a hawkish stance. Markets are now shifting focus towards the upcoming US PCE inflation and the preliminary GDP figures, with a stronger than expected inflation outcome likely to reinforce higher for longer rate expectations in the US and lift the US dollar. Australia's softer CPI reading earlier in the week added to the view that inflation across major economies may continue to cool gradually. Technically, though, the RSI and the MACD is negative and therefore should weigh on the Aussie down towards this level, seen around 70 and reassess from there. Keep an eye on this trend as well with the ADX. It is bearish. The euro dollar, well, after a whipsaw price action, the market is lower and now looking towards that level of 115.65.70. Keep an eye on that level just in case the market breaks and we drop towards 115. Thursday's US PCE index report with a hotter reading, as I mentioned, likely to reinforce expectations for a hawkish Federal Reserve under the chair Kevin Walsh. And along with that, traders continue pricing in a strong chance of an ECB rate hike on June the 11th, leaving the euro caught between competing central bank expectations. As the technicals are negative, I am a bear and I'm looking down towards where I've outlined here at 115 and reassess. The bears are likely to come back soon and a bull trap could be triggered very, very soon, as the Bank of Japan officials maintain that further tightening remains possible, though the timing will depend on the economic impact of tensions in the Middle East and high oil prices, but also keeping an eye of any intervention, as we've seen before. Big sell-off in the candles, and therefore this could easily be wiped out. Divergence here does support a pullback, so I am a bear, and let's see how it plays. Turning to sterling, well, the recent whipsaw price action turns into a bear case, and now looking lower towards the region of 132, where I've outlined here, and reassess from there. Wrapping up with commodities, heavier than expected, gold falls through 4,400 and now looking for a further downward test. But can we see that? The support is seen around 4,365 to 4,335. But I'm getting the feeling that we could see a bounce very soon, so keep an eye on that. Along with that, oil, well, the market is recovering slightly after Iran targeted a US airbase in response to fresh American strikes, reigniting concerns over escalating Middle East tension and disruption. Given the fact that the market has, or finding the base quite close towards that 84 to 86 area, we may see a bounce very soon. There's still a lot of noise inside this range. That's a wrap. Thank you for joining me. And as always, look out for the interest report. I hope you enjoy the great start to the day.